Hello guys, I'm going to use this video to to explain a strategy that is very strong. So the strategy works by combining various chart patterns and the Fibonacci retracement too. So this strategy, it works in a ranging market, it works in a trending market. To get a ranging market pair, you go to, or a consolidating market pair, you go to your currency heat wave app meter and you look for the pair that are very close, that their strengths are very close. Maybe the strength of one is 4 and the strength of the other one is like 3.5. So that's going to give you a consolidating pair. Then for a trending market pair, you want to look for the difference in strength to be very wide. Maybe one is like 7 and the other one is like 4 or 3, or one is like 7 and the other one is like 3. So this this strategy that I'm going to explain now works both in a trending market and a ranging market. So you can also use this strategy to trade both uptrend and downtrend. So if the market is in an uptrend, like in this case, this is my 200 period moving average, that's the purple line on my charts. So you can see this an uptrend, price is above the 200 period moving average. So the only chart patterns I'm going to be looking at to trade the breakouts are going to be just the bullish chart patterns, like the ascending triangle, the falling channel, the falling wedge, the double bottom, and all that. Those are the chart pattern I'm going to be looking to be trading their breakout. But this symmetric triangle too also works. So but this strategy works better for the triangles. Let's say the ascending triangle, the symmetric triangle, and the falling triangle. So first of all, the first thing you need to do is to identify your highest and lowest swing points that you can see on your chart. You can see over here, I have my highest swing point over there, and here I have my lowest swing point. Let me use it as my lowest swing point. So the next thing you are going to do again is to draw the chart pattern that you can make out. Like now I can make out this chart pattern over here. I can make out a chart pattern. I can make out, I'm seeing higher highs, price is making higher highs in an uptrend, and that's a good sign already. So I'm seeing price making higher highs, and a 200 moving average over here, the purple line, is acting as the 200 period moving average is acting as support to price. So the chart pattern that I have identified over here is the ascending triangle, and you know ascending triangle is a bullish chart pattern, because especially in an uptrend, and you can see this an uptrend and you have a bullish chart pattern. So the probability of this trading setup breaking out is actually very high. So the other concepts again is you can also add you can see price is forming a little build up over here towards the resistance. You can also add your 20 period moving average. You can see my 20 period moving average, the golden one over there. So you can see the 20 period moving average has started supporting the price, and that's a good sign too. So the next thing you want to do is that you want to use the Fibonacci levels to set your take profits. So your stop loss is going to be over here. Your stop loss is going to just be below this 200 period moving average. So for the price to get your stop loss, it must go through the 200 period moving average. That's the concept. Or you can also maybe put it below this one, below this swing glue. It's still okay, but to be more more like conservative, we just put it over here, just below the 200 period moving average. So that the red line is my stop loss. So the Fibonacci is going to help you to know when how far price is going to break out. So let me bring out my Fibonacci. So how do you put the Fibonacci to? You want to put it from the low. You can see that the 20 period moving average is supporting price already. So you put the Fibonacci retracement tool from this price rejection over here, or you can use this price rejection over here. Then since you are expecting the price to go up, you drag upward towards here. So the aim is to take, you can see what is happening here. So I'm using this swing guide that I have identified before over here. That's what I'm using as my reference for this support resistance over here to set my Fibonacci. So all I did was just pull the Fibonacci from the, let me just do it again. So what you want to do is pull the Fibonacci. You can see this blue pointer, then you drag up, because you're expecting the price to go up. You drag up to this level. So you can see my Fibonacci retracement tool. So the idea here is that you want to take profits here. You want to take profits here. That's this golden zone. Let me just highlighting it as golden zone. You want to take profit between this golden zone and the LD retracement zone. That's this golden zone, and yeah, or yeah. So the aim is to take profits very fast before the trend starts reversing. So you see that you are taking profit. Let me remove you see that you are taking profits around this green line over here after pulling out your Fibonacci, or you are taking profit around this golden zone. So that is the concept. So when the price breaks out, it's going to move like this towards your price before it starts retracing down and going back up again. So let's see how. Let me remove the Fibonacci to make the charts cleaner. So let's see how this breakout is going to work. Let's see. You can see I say you can take profits between this golden zone. In my earlier video, I've explained what golden zone actually means. Between this golden zone, or you can take it on the LD retracement zone. So the LD retracement zone is the green line, and the golden zone is this section over here. So let's see how the price is going to react to this. So you can see it. So if you had set your TP over here, you can see that price has actually come to it and you'll be in profit. So that's the point of this strategy, is catching that full breakout, that full powerful breakout, catching it and taking profit. So your take profit, that's this blue, is going to be at the top, and your stop loss. So your entry is the, let me put it, your entry was here. Let me add it as a, let's say pink, no, let's say green. So your entry was this green line over here, your stop loss was here, and your take profit was here. And you saw how price went to your take profit immediately before it starts pulling back. So if you had just set your take profit over there, you would have caught that move at least. So you can, depending on how far you want to take profit, you can use the levels of the Fibonacci. Let me draw it again. So we started from here then to this swing guy. So you can even use it up to this purple over here. That's 0.236. So that's just the concept. Identify chart patterns and trade the breakouts. In an uptrend, you want to go for bullish chart patterns, and in a downtrend, you want to go for the breakdown of bearish chart pattern. So that's just basically the concept of this strategy.